What's going on, guys? I just got home, but I wanted to go over Chargepoint's earnings. It did drop today, and we had a dramatic sell-off after hours. Now I wanted to go into it. There's some good and some bad, and let's just get right into it and look over it. So looking at this, and I will leave it down below as always, fourth quarter fiscal 2023 revenue of $153 million, which is a 93% year-over-year growth. And here's some key points. Chargepoint's annualized subscription revenue crosses the $100 million mark. Their GAAP and non-GAAP gross margin improved 4% and 3% respectively. And here's the first negative. Chargepoint guides their first quarter fiscal 2024 revenue of 122 to 132 million. The U.S. Postal Service awards Chargepoint partner Rexel Energy Solutions contract for the supply of Chargepoint chargers, cloud-based charger management subscription licenses, and extended parts warranty services. Now let's get deeper into this. As I said, their fourth quarter revenue was 152.8 million, which is up 93% from 79.3 million. Keep these numbers in mind, and I'm going to show you something. Their network charging system revenue for the fourth quarter was 122.3 million. Which is up 109% from 58 million in the prior year's same quarter. Subscription revenue was 25 million, and that's why now they're looking at $100 million annualized subscription revenue. But they should be continuing to grow from here on out. Now, as for their gross margin, fourth quarter GAAP, or generally accepted accounting principle margin, improved sequentially but was flat to the prior year's same quarter. And I wanted to show you their net loss. So their net loss was 78 million. Compared to 60.1 million in the prior year's same quarter. So this is an $18 million increase in loss, whereas their revenue year over year is double, from 79 million to 152 million. Their increase in revenue is outpacing their loss. However, they are still losing money, and we don't want to see them losing even more money. However, when you look at their non-GAAP loss in the fourth quarter, it excludes 25 million in stock-based compensation. Now you might be worrying, okay, they're losing a lot of money. Well, what's the cash look like? They do have about 400 million, including 50 million that they made on ATM or at the market share offerings during the fourth quarter. And they currently have 348 million outstanding shares as of January 31, which is what this report is on. And looking at the full year, they increased 94% from 241 million to 468 million. And I wanted to show you, besides them missing some numbers, I wanted to show you another thing that sparks a little bit of fear here, and this is what they expect for revenue next quarter. And this is the quarter ending April 30. They do expect 122 million to 132 million, which, while yes, this is an increase of 56% compared to the prior year's same quarter, but this would be a decline for the first time quarter over quarter. And the CEO did say this is, just due to supply problems. That's why they didn't hit their revenue expectations this quarter, and likely the reason that they lowered their revenue expectations next quarter. And I wanted to show you guys that after hours, this thing just absolutely tanked. However, it does still have some lower points that can back it up from a chart perspective. This is an uncharted territory here. It's not creating lows, but it is definitely nearing those lows in the $8 range. But let me know what you guys think about their earnings. I will be listening to the call here when I get a chance tonight. But if you guys did listen to it, let me know what you got out of the Q&A and out of the overall call. I'm still very bullish on Chargepoint, despite seeing a potential of a quarterly decrease next quarter. They do still have a solid cash balance, and as they do over time continue to ramp up revenue and also continue to add to their subscription revenue, which is going to be recurring, they should be tightening up those losses and getting towards profitability. And at this current rate, with what cash they have, they do have over a year to figure that out before potentially diluting, pulling out more debt, things of that nature. But let me know how you feel about Chargepoint's earnings, and are you going to be buying moving forwards, or are you just going to wait, see where this levels out at, or even potentially wait a couple of quarters and kind of see where it goes from there. Now, this quarter we did report an increase in revenue. Where the problem lies, it's expectations for next quarter. This could be the first decrease in revenue. However, I don't think we're going to see that quarter after quarter after quarter. So I do personally see this as a buying opportunity, but let me know your thoughts. Thanks as always, guys, and see you tomorrow.